Good evening, everyone. This is Prajakta. I would like to warmly welcome you all on behalf of NGEN Research. Meanwhile, others join, what I will do is introduce our topic for today's webinar. So we will have a look at performance comparison of mutual fund schemes, specifically focusing on these key areas. So firstly, we will look how you can really load mutual fund schemes in multiple ways using NGEN Markets. Secondly, we will have a look at parameters like rolling returns analysis, point-to-point analysis, and then take a look at fund-specific drawdown and recovery analysis. We'll have a look at how we can check which specific mutual funds recover quickest from a specific drawdown, and categorically look at the correlations analysis and how it is really relevant to look at in addition to position overlap. So, considering only position overlapping in independently is not sufficient. You need to check that in tandem with correlations analysis to take a better call on whether your portfolios that you're trying to build for your clients, or even mutual funds that you're trying to screen, are they really diversified, or is your diversification objective not achieved? So that's how we will actually see how correlations analysis can be of a lot of use if it's considered in addition to position overlap. Uh, is my screen not visible? One second.
Yeah, we can see your presentation screen. So when you share the application, we haven't started sharing the application yet.
Yes. Yeah. I hope it is visible now.
Yeah, it is visible.
Okay.
Go ahead.
Okay. Yeah, fine. So first, let's see multiple ways of loading in mutual funds into NGEN Markets. Firstly, let's go to the funds section. In the funds section, we can just click on filter categories and choose, let's say, for example, two categories, one from the equity basket, let's consider FlexiCap, and one from, let's say, a balanced advantage fund, so dynamic asset allocation. So both of them are really diversified schemes, categories that we have chosen, and click on close. When you click on close, all of the mutual funds that are there in this specific two categories get loaded right here. But you would like to restrict your search by adding in some filter parameters to enable further smooth analysis. What we will then do is apply some basic filters to it. One by one, I'll explain how you can add the filters right here in the funds section. First, you can put in minimum AUM filters. Let's say, for example, put in, for an example, 1,500 as minimum AUM criteria. Next, we would like to have a look at only those mutual fund schemes who have at least a minimum reporting history of 5 years, so that we really exclude very, very young funds from our screening and focus on comparing performance of only those who have at least had a 5 years reporting history. Just put in 5 years as the minimum age. Moving ahead, we can also put in a minimum 3-year or a whatever 1-year return criteria for the mutual funds into consideration. So for an example case for this webinar, I'm considering a 3-year minimum return criteria to be generated by all my funds in my universe as, let's say, 10%. That's the bare minimum that I expect by all the mutual funds to generate in the 3 years. So I put in 10% as the minimum return criteria. And then I just click on apply. When I click on apply, the entire long list that you could previously see has now gotten shortened to these specific funds. And now you would then take them for analysis that we are specifically planning to do in this webinar in the compare section by just clicking on this add top 50 to compare button. You need not add them one by one right here. When you just click on this, it will automatically get populated in the compare section within a matter of a click. So I just clicked on that button, and all the 19 funds that were there in my screener automatically got added right here in my compare section. And now, one by one, I will try to, this entire database is too huge to handle. I do not want to consider all of these columns. So then to really exclude all the junk columns from this list and to concentrate and focus my analysis on only those columns that are really relevant for my analysis right now, what I will do is click on this button, which is right below the main list. It will let me show or hide some specific columns from my selection. So I'll just delete all of them. So just untick all columns. And now I will choose one by one that I want to include in my search. So let me add age, because that I think is a relevant criteria. Let me go ahead and add in AUM, total expense ratios, price. By price, we mean the NAVs, the CAGR. Let me also put in standard deviation, which is a criteria of risk that, or the volatility that is there in mutual funds with respect to their deviations from their returns. Let me also add in Sharpe ratio as a parameter, and then let me directly jump to 1 year, 3 year, 1 year, 2 year, 3 year returns, whichever I want. So I am actually choosing the ones that I would like to really look at while I am analyzing, so that all of the junk columns really get eliminated and I focus on only those that are relevant for my search. I will also add in a couple of relative column indices, relative columns, basically annual excess and beta, and for their holdings, equity and debt, categorizations into equity and debt percentages, and of course, large cap, mid cap, and small cap exposures. So now I've kept only those columns that I want to have a look at while analyzing, and I just click somewhere else. So I do not have a lot of columns in my search now. I can now focus on these parameters and perform analytics. So let me just now categorize them or sort them up as per their Sharpe ratios. So when I click on Sharpe ratio as a column heading, all of this get sorted on the basis of highest to lowest Sharpe ratios as a parameter reported by this entire category under consideration. So we have some flexi cap funds, we have some dynamic balanced asset allocation funds. If you want to look at what are the categories, just click on this and we have them sorted as per the category. Right. And then I have that the highest Sharpe ratio in this entire universe that I'm looking at is by HDFC Balanced Advantage Fund, followed by Nippon India Balanced Advantage Fund, and of course the others. The lowest in the category in my selection is Axis Flexi Cap Fund, which has a lowest Sharpe ratio of 0.23. So as a thumb rule, as a rule of thumb for any equity oriented mutual funds or equity-oriented securities, when you're evaluating them, higher the Sharpe ratio, the better is the performance of that specific mutual funds. So when I say that I sort them as per the Sharpe ratios, when I sort them as high to low, these are the top performing funds in that universe, and when I go down, these are the lowest because they've generated lower Sharpe ratios. These are underperforming or low performing a little lower with respect to others. And by the way, what we are seeing here, so whatever returns that we are seeing, the CAGR returns, Sharpe ratios, standard deviation, everything is from inception of all of these funds with respect to their individual start dates. So when I do not click on any start date here, it is default since inception. All of these numbers are since inception. Let's say I want to evaluate their performance from a common point from a start date of, let's say, 2018. That's last 6 years. That's why I'm choosing 2018. So let me just put it as 9th of March 2018 and click on go. When I choose a custom start date and run, now whatever data you see in these green columns, which are return columns, are from a start date of of my choice. That's 9th of March 2018. So 9th of March 2018 onwards, if I want to have a look at the Sharpe ratios generated by these mutual funds, that's right there in front of my screen. So when I sort it as per the Sharpe ratios, I have the highest Sharpe ratio from 2018 is by Parag Parikh FlexiCap. Next is PGIM, HDFC FlexiCap. And lowest is, by the way, again, a FlexiCap category, which is IDFC FlexiCap. Similarly for the CAGR. So if I just click on sorting it up as per compounded annual growth rate, I have the highest CAGR in this category by Parag Parikh, which of course goes in tandem with the Sharpe ratio. So it recorded the highest Sharpe ratio. It also has the highest CAGR, which corroborates our hypothesis that we just built, that higher the Sharpe ratios, better is the performance. That specifically underlines that fact right here. Right? That's the one way of loading all of these funds from the fund screener to the compare section. Second way is in the fund section, go to category averages. When you go to category averages, and let's say you want to have a look at, let's say, only equity asset class as a matter of fact, just untick others and keep equity selected. We have all the subcategories in equity as an asset class right here mentioned. So let's say I want to have a look at small cap funds taken together. When I come to small cap funds, I can see that there are 24 small cap funds currently trading in Indian equity markets. Entire small cap fund as a category, the average Sharpe ratio of the entire category is 0.53. The value at risk, which is an indication of downside risk protection that the entire category has, is negative 26.18. How do you interpret this? You interpret this as with a 95% confidence interval. That is, with 95% confidence, the lowest that this entire category can ever go is on an average negative 26.18. Of course, there's a 5% chance that the returns could go even worse to negative 26. Now, let's say I want to add this entire category of small cap into compare section. I just have to click on this small cap funds and click on this button, which will add all the funds in the small cap as a category to my compare section. And by the way, did you notice we had selected only selective columns right there, and our search has really gotten restricted to only those columns, our analysis basically. We do not have other junk columns in our analysis. But let's say you want to add in a couple of them, that's equally simple. Just click on this mesh that you can see. It's a small button just below the main list, and go ahead and add in whichever columns you would like. You also have the option to include all of the columns right here. Let's currently keep it restricted to these. And let's say now I want to compare this entire category returns against a benchmark. Because this is a small cap category, let's say I want to compare this returns against small cap index. So let me just put in small cap. Let me compare this against Nifty small cap 100 as a benchmark, and have a look at the annual excess generated by each of these funds in this category with respect to the benchmark, of course, in tandem with the beta, which is a measure of risk that the funds have with respect to the benchmark. Before proceeding, let me just delete some very, very young funds in this category so that we can really backtest to a very long time, fairly long time. So how do you delete that? So just click on age and you will have so it's sorted in the ascending order. So you can see Mahindra Manulife is the youngest fund, which has a start date of, it launched on 14th of December 2022. So we just click on this delete button and it gets deleted. If you want to delete one more, so let's keep it as a standard age of 5 years or more. So I just click on delete button and it gets deleted. Once I'm done deleting and I have the minimum funds that are now in my selection in small cap as a category as let's say 5 years, I will now proceed and check their annual excess with respect to the benchmark. So now you can see that the minimum age of the funds in my selection is 5 years and above. Let me now put in a common start date. Let me just take this from 2021 of, let's say, December. So from 2021 December, I have the returns right here. You need to make sure that the comparison is fair. In an apples to apples comparison, you need to make sure that both the return columns and the benchmark column dates are the same. So change this to 2021 December as well. Once this is done, we can now see that when we sort this as per the annual excess, highest to lowest, Nippon India Small Cap Fund has managed to generate an annual excess of 19% with a lesser beta with respect to the benchmark. Wherever the beta is less than 1, that means the fund undertakes a lesser risk with respect to the benchmark. A beta of more than 1 typically means the fund has a higher risk with respect to the chosen benchmark, of course. I mean, if you just change this benchmark, it will get changed. Since we have chosen this as Nifty Small Cap 100, that's the benchmark under consideration. And we can see in this entire category, none of the funds have a beta which is above 1. So none of these funds undertake a risk which is higher than that of the benchmark. And in spite of that, all of the funds have managed, all of these funds, of course, have managed to generate an annual excess of this magnitude. If we sort it highest to lowest, Nippon, HDFC, Quant, these are typically the funds who have generated an excess taking a risk which is lesser than the benchmark risk. Definitely a green flag when choosing a fund. That's the second way of how you could load the entire category of mutual funds and perform comparison analysis in the compare section. The third way is, let's say you want to load the entire portfolio schemes that are, let's say, current, let's say some of your existing clients, they hold some 13 odd funds in their portfolio, and you want to do a same analytics, let's say a rolling analysis or a drawdowns analysis on the entire portfolio of the client. How do you load that client from here? I mean, instead of going to portfolios and performing entire portfolio analysis, what you can do is in the compare section itself, there is this tab wherein you can search the entire the portfolios that are already saved in your login. So just search for a random portfolio. I'm taking in, for an example, Shekhar Sharma's portfolio. I just search that name and all of his components of his portfolio get added in a matter of a click. So you can see there are 14 components in his portfolio. All of them have gotten added in this compare section. And now I just have to click on whatever analytics that I want to do for his holdings of his portfolio. Let's say to begin with, I really start with a rolling returns analysis. When I run a rolling returns analysis, I put in a start and end date. Let me just put it as, let's say, April of 2014. And let's say an end date of, let's keep it latest, so 9th of March 2023. And when I run a rolling analysis on the components of this portfolio, I can see that the lowest, highest, basically lower returns that have been generated by the components of his scheme on the basis of a 260-day rolling is to an extent of negative 44%. And that was given by HDFC Small Cap Fund. However, as you increase the period to, let's say, a 2-year rolling, that's a what will be a 2-year equivalent? It will be 520 days, because everywhere in our platform, we consider 1 year as 260 working days. So you just have to multiply with the number of years and you will have that those many days and run a rolling analysis on that. When we increase a rolling period to 2 year, what we can categorically check is the lowest returns that have been generated by any of the components in the fund have drastically reduced. So with a 1-year rolling, we could see that the lowest return was negative 44%. As you increase the period, as is generally the norm in mutual funds, I mean, it's not as dynamic as stocks. The longer you stay invested, your potential of earning returns gets definitely increased. Similar to that, you can even see the lower side returns have actually practically halved when you increase the holding period to 2 years. So this is by this 520-day rolling. What I mean by this is from 2014 onwards till 2023, that's close to 9 odd years. In any 2 years, the lowest returns that would ever be given by this fund, HDFC, is negative 22%. In any 2-year period from 2014 to 2023, the lowest that Tata Equity PE fund would ever give is 17%. That's how you interpret this low result. Let me now show you how you can interpret volatility, which is the second column right here. So with a 520-day rolling window, from this period, of course, 1st of April 2014 to 9th of March 2023, the volatility of these funds of the portfolio, highest to lowest, is HDFC small cap has the highest volatility. And by highest volatility, I mean the NAV movements, the up and down movements in the NAV prices. They have been the highest among this entire portfolio, which is 21%. The lowest volatile of this portfolio, the fund in the portfolio that is lowest volatile, is ICICI Prudential Savings Fund, which makes sense, being a debt category fund, which has a typically lower volatility. Of course, the highest return will also be affected then. In that case, the highest this fund has ever generated is a 9.71%, with a very, very low volatility, lowest volatility in the category, right? Let's say you want to have a look at the average returns that were generated by the components of the portfolio or any specific mutual fund in a 2-year rolling, that's 520-day rolling, between, of course, a start and end date. You just have to click on this average column, and you can see the average returns in any 2-year period that would be generated by HDFC Small Cap Fund would be 21.50%. That's how you interpret rolling analysis. Now let's go ahead and have a look at a point-to-point analysis. For this, let me just add in another way, that the fourth way of loading in mutual funds. So we saw 3. We loaded in from the screener. That was the first way. Second was we loaded in entire category average of small cap. Third, we loaded in entire portfolio and its holdings, one by one mutual funds, and performed rolling analysis. Next way is you could save a list and pick that list whenever you would like to perform some analytics on it. For I'll just show how you can do that. Let me just remove all of these components. You just have to click on this My List. Once you've saved any specific list, when you just click on My List, you will have to just scroll down and find your list right here. So I have saved a list called as of 13 odd funds for this webinar, and I will load this list and perform a point-to-point analysis on this. By what I mean by point-to-point analysis is we have given you 5 different buckets, and you can put in basically any start and end dates to it. You can customize it. You can create scenarios. So what we have in portfolio analytics, scenario analysis, you can replicate this in the compare section using point-to-point analysis. Just come to point-to-point analysis, choose absolute return figures, because we are choosing very customized dates. For use case, what I've done is I've created 5 different buckets of all the union budget scenarios. We typically have our union budget around 1st of February. So I have taken in a couple of days before the budget and a week or so after the budget from 2019, right? And I have just put in the start dates right here. And when I click on sort, this gives me the highest to lowest that these funds have generated in this scenario. Because of course, because this is a custom scenario, typically less than a year, that's why I've chosen absolute as a toggle, right? If this is more than a year and you would like to have a look at annualized figures, you just have to click on annualized. But because this is a custom scenario where I've typically taken just a couple of weeks every single time for these 5 different years, I've clicked on absolute. And I can see that in this scenario, across different years, when budget was declared after that, how that typically affect the funds. I can see that within a matter of 2 weeks, UTI infrastructure fund jumped or returned 14.50%. That's typically 15% return in 2 weeks. That typical insight that you can definitely get from this point-to-point scenario analysis. You could create your any custom scenarios. There are 5 different buckets. You could go ahead and put in any start date and end date and sort it up, and you will have them sorted highest to lowest. Let's consider a recent scenario. With the recent budget, we do not typically see very high returns generated by any specific fund. However, we have it a mix. So some of them were positive in this 2-week period. However, as the markets typically stayed volatile during this entire time, we also have the others which have generated negative returns during this time period. So you could just create any scenarios that you would like and run point-to-point analysis on this and have a scenario analysis right here in the compare section. That's the point-to-point analysis. Moving ahead, let's take a look at the drawdowns analysis and create something similar to what you can see right here. So in the Insights tab, our product and training team comes up with every single week. So let's say this. So how do you replicate this? So what this says is a BSE sector indices ranked on the basis of their fastest recovery from their drawdowns, right? So this is a very insightful insight that can be seen. So none of the market portfolios or mutual funds which are actually trading in markets will ever be immune to losses. They are bound to face losses at some point of time. But what is actually critical and what is important is to check as to how quickly do they recover from a specific loss. That is again a very important parameter that you ideally should use and you can use with using NGEN Markets to come up with this analytics and show that up to your client while making proposals. How do you do that? Just come to compare section, click on drawdowns analysis, choose in a start date. Let's say you want to compare drawdowns of this list of funds from let's say 2019. Let me put in as 2nd of December 2019 as a start date, and from this date, so from 2nd of December 2019, the worst, second worst, third worst, fourth worst, and fifth worst, these are the drawdowns. If I want to sort them up as per their sizes, that's the magnitude of losses, I just click on this size as a column. When I click on size, it gets sorted on the basis of descending order, that's highest to lowest as per their magnitude of losses. So I can see that UTI Transportation and Logistics Funds, which is a typical auto sector fund, had a highest loss of a magnitude of close to 43.76%. Right? And what was the time period during this loss? That the start date was 17th of Jan 2020 and end date was 23rd of March 2020. That's visible right here. And the length of this drawdown, so that means this fund fell 43% within a span of 66 working days. Right? Within a span of 66, that's the length. That's the length interpretation. So within 17th of Jan 2020 to 23rd of March 2020, the fund fell close to 45%. And after that, the fund took 172 days, typically double, more than double the days that it took to fall to recover. So that can be really thought of as a red flag or a green flag depending upon the fund that you are. So typically this one. So let's say this fund, which is a IDFC banking and PSU debt fund, it took 17 days to register a fall of 3.30%, but it recovered within a matter of 4 working days from this loss, right? Let's say you want to sort them up as per their recovery, fastest recovery. How do you do that? Just click on this recovery column heading, and you will have this sorted as per their recovery dates. So you can see the fastest that it has ever recovered from a loss of 3% is IDFC Banking and PSU debt fund. It took 17 days to fall. However, it recovered in a matter of 4 days from this loss. That's typically how you can check how fast does it recover. Of course, this was a bird's eye view. If you would like to dive into detail, if you would like to drill down, we have given this history button right here. Just click on this and you will have all of this in graphical manner as well as tabulated manner. So we can see that a loss of 3.30 happened between this date. It typically took 4 days to recover, and the recovery happened on 27th of March 2020. So all of this is right there available at your disposal. You just should know how to use it, right? Just click on recovery and you will have it sorted as per the fastest recovery. That's how you check the drawdowns analysis. Next, let's check how you can have a look at the position overlap and the correlations of this list that we have. So considering position overlap is that way very, very rampant in the market. People use it. But considering only position overlap independently does not serve the purpose completely. Because when we click on position overlap, now that I've clicked on this, I can see that the portfolio as in the funds that I have in this selection seem pretty diversified because they do not have a lot of common positions. So if, for example, if I want to see that Kotak Small Cap and Axis Focus 25 fund have only common positions to an extent of 3%. And these are the specific three or four holdings that are common in between these funds with a position overlap of only 3%. Right. So if I were to just rely on position overlap and take a decision as to, okay, fine, I should include these two funds in my portfolio, it will give me a better diversification. But that may not always be right. You should always back this position overlapping with the correlations analysis. When I click on correlations, I can see that Kotak Small Cap has a very, very high correlation with Axis Focus 25 fund with even a 3% overlap. The position overlap was very, very minimal, only a 3%. But its correlation with Axis Focus 25 fund is pretty high, more than 0.80. What correlation signifies is how coordinated their NAV movements will be at any given point of time. So when Kotak Small Cap NAV is in an uptrend, it is going up, 83% of the time Axis Focus 25 fund NAV will also catch up. That's how you categorically or interpret correlations analysis. So you, instead of just relying your decision or diversification decisions on position overlap, you should check correlations in tandem, and only then should you take a decision if your portfolio is properly diversified. Are the two funds that I'm recommending to your client, to my client, are they actually appropriate with respect to his risk-taking capacity, and of course the diversification benefits. A highlight of correlations analysis that we provide at NGEN Markets is we calculate these correlations on a daily basis, on a daily frequency, on the basis of their daily NAV movements. That specifically means that we consider for 1 year 260 data points. And of course, multiplying by the number of years, we do have it for that frequency. It's not a monthly frequency, it's a daily frequency. So you have a better picture at the correlations. None of the data point is left. We cover every single day NAV movements to come up with these correlations. So you can rest assured that these are accurate numbers and you can use it for effective diversification. That's about the correlations analysis. So that typically ends our topic related webinar. Before throwing the forum open for Q&A, what I would like to add is I would like to introduce you all to the latest feature that we have added. So we have now included category averages as a parameter that you would like that you can include in comparing your portfolio or your fund performances against. I'll just illustrate this with a simple example. Let me just take in let's say a fund. Let me just take in Parag Parikh Flexi Cap. I've just added in that fund right here. And now, if I would like to compare its performance against the entire category average of FlexiCap, I will just go on this tab, which is add other items. Just below search indices, we have historical category averages. I will just search for FlexiCap right here. When I search for FlexiCap and I click on this, it gets added as a row item. So you can see this category average FlexiCap has now gotten added. I can see that, let me just reset this to inception so that it is common. So from inception, the category average, so FlexiCap funds as a category have had a CAGR of 13%. Vis-a-vis category average of FlexiCap, the Parag Parikh respective to that specific fund, the CAGR that is generated by that fund is 17.67. You can use this in taking a decision as to which mutual fund has beaten the category average or which of it has not managed to beat the category average. So you can go ahead and add in the category averages and load in the entire FlexiCap category, or maybe let's say 2 or 3 FlexiCap funds, and compare it with respect to multiple parameters. I mean, you can compare it with respect to Sharpe ratios. The category average of FlexiCap with respect to Sharpe ratios is 0.41, and with respect to Parag Parikh, this fund, the Sharpe ratio of this fund is 0.77, of course, since inception. So this is how you could check which of the funds have managed to outperform the category or which have not managed to outperform. So that's a green flag versus a red flag. So you could use this for your analytics. And that's about it from my side. We can now throw the forum open for Q&A. You can directly unmute yourself to ask your question, or you could type your question in the chat box. Our team will answer it for you.
Hello. Hello.
Yes, ma'am, you're audible.
Point to point है ना, तो होल ईयर क्या हम लोग बता सकते हैं कि ये इस ईयर में ये कितने पोर्टफोलियो रिटर्न
हेलो
हाँ
ये एक्चुअली वो years वाला टैब प्रोजेक्ट एक बार लगाओ। तो मैम यहाँ पे आपको कैलेंडर ईयर दिख जाएगा पूरा, सारे इंडिविजुअल जो years हैं सारे सिंगल फंड्स के आपको दिख जाएंगे।
हाँ ये बराबर है, लेकिन ये जो पोर्टफोलियो है इसमें पिछले साल में कितना ग्रोथ दिखाया, ये हम लोग बता सकते हैं क्या?
देखिए, अगर आपने पोर्टफोलियो सिस्टम में डाला है जो आपके लेटेस्ट होल्डिंग्स हैं, तो उसके बैक टेस्ट की तो रिटर्न्स आप हर तरीके से देख सकते हैं। प्रोजेक्टर जैसे रन वन एनी पोर्टफोलियो, जैसे यहाँ पे एक पोर्टफोलियो है, इसको हम यहाँ पे रन करेंगे तो आपके हर टाइप ऑफ टाइम पीरियड पे आपको यहाँ पे रिटर्न दिख जाएगा।
हाँ ओके।
थैंक यू।
तो इसमें पॉइंट टू पॉइंट जाने की जरूरत नहीं है, इसमें देखा तो भी चलेगा ऐसा ना?
आपको इसका पॉइंट टू पॉइंट देखना है?
हाँ हाँ हाँ।
अच्छा, पोर्टफोलियो के बैक टेस्ट का पॉइंट टू पॉइंट देखिए, आप स्टार्ट डेट तो चेंज कर सकते हैं इस पोर्टफोलियो एनालिसिस का, दैट्स वेरी इजी। अगर आपको एंड डेट चेंज करना है तो उसके लिए ये पोर्टफोलियो ना हमें सेव करके कस्टम सिक्योरिटी के साथ ऐड करना पड़ेगा। बट हाँ, मतलब वो थोड़ा लंबा प्रोसेस हो जाता है, बिकॉज आपको यहाँ से कॉपी पेस्ट करके माई सिक्योरिटीज में जाके उसको ऐड करना पड़ेगा, फिर आप उसको कंपेयर सेक्शन में डाल सकते हैं। बट पोर्टफोलियो में आप स्टार्ट डेट चेंज कर सकते हैं अगर आपको पॉइंट टू पॉइंट देखना है।
ओके।
There is a question on the chat. I think Anirup has posted it, probably on behalf of someone. A recording of all our Friday sessions is actually available on our YouTube channel. You can access it from the portal inside where Prajakta has just shown you the link, or you can just go on to Google and just type NGEN Markets YouTube, and you will get the YouTube channel where there is a playlist called webinars, and in there you'll see all our previous webinars, and this one will also be uploaded there in a couple of days. If anyone else has any questions, please let us know, either on the chat or just unmute and ask a question. Okay, Prajakta, if there's nothing else, I think we can close for today.
Yes, sir. So thank you everyone for joining in. You could check our webinar recordings, as sir has already said, on our YouTube channel. We keep uploading all of the YouTube videos very, very frequently. You can also check in our shorts. Those are 1 odd minute shorts that we have uploaded. You could check this up for a specific query that you can have on how do you run for a specific tab on NGEN Markets. You could check point-to-point analysis. Just click on this video, you'll have it. That's it from my side. Thank you everyone for joining in. Have a great weekend.